following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, start of a new week. This is April the 10th, and next week is Marathon Day, the 17th. So, thank you to our host. Great programming start here for the week. A lot of valuable information. Let's see if we can keep that up. Run the numbers. Dow is up 64. It was up almost 90 earlier on. S&P is up 6, almost 9 earlier on. So the Dow is at 20,721, S&P is at 2361, the comp index is at 5890, up 13. You've got gold, and right now gold is, if I can just find, down $4 at 1253. Silver is down 32 at 1783. You got high-grade copper down 3 at 260. Whoa, not a good sign. Crude oil is up at 52.86, up 62 cents, and bonds are at 151.27, up 11.30 seconds, and the dollar is down 16 cents. Okay. Very important. Let's go through a couple of things right now. The reason why I want you to get that out the way. See the 2-minute chart here? 2-minute E-mini. What's the objective in the Chapman wave? Objective is always to get you. I'll have to move this away if I'm going to give you an objective. Objective is always to get you from a most identifiable low bar to 4 higher peaks. At the 4th highest peak, we call it leg D, going to a peak D. Other things can happen. That's just the core of the Chapman wave concept. So what do? We go peak A, 2-minute chart starts off at, what was that? 9 o'clock this morning at 2352.50, goes to peak A, then a peak B/D, because it could have been a continuation of the peak C1, C2, C3 earlier on. So D/B, but then it goes to a C and a D. At the D, it stumbles for just a moment. The moving average convergence, divergence pulls back. The stochastic pulls back a little bit. But look what happens. There's a sneeze. Then it goes to a leg E, goes sideways, and what it does is it hugs the 9-period exponential moving average even as the technicals are failing. Suddenly the technicals give one burst of strength, and that takes you to a peak F. It's called a right arm extension in the Chapman wave. You could also call it a rogue wave. And that way it also turns out to be a Chapman wave 5. And then what does it do? It gives back all the gains from that support that I showed right there. It makes a left side, right side price test. Now it's about to attempt some kind of support, but the MACD is still very negative. Remember, this is a 2-minute E-mini chart. Let's look at the 10-minute chart, then we're going to go on to the business at hand. The 10-minute chart has made a peak D. I've got the down arrow because the MACD's pulled back sharply, but the stochastic's gone from way over 80%, almost 90%, no, at 90%. Now it's 64%. Not such a good sign. Sorry. Now at 73%, under the 80%. So my contention, now we can go through the markets. The Dow, INDU. As far as I can see, and all the work I did, oh man, I gave Dow charts over the weekend. I also, this is the first weekend that we've been home. It was amazing. What a pleasure. So this weekend, I was able to go through the Investors Business Daily, a whole chunk of charts that I haven't been able to update. There are new leadership there, very interesting. I went through, Boston Globe always has the top 25, Globe 25 index. I love to look at it because these are usually major stocks. General Electric was number 1. And it's actually doing very nicely. That was the clue for us that the Dow could start to do a little bit better, but perhaps we're looking at the NASDAQ starting to pull back. Yeah, we'll go into that in a moment. But you've got Thermo Fisher Scientific, TMO, what a fantastic company. Biogen, American Tower, TJX, Raytheon, Boston Scientific, State Street Corp, Analog Devices, ADI, Vertex Pharmaceutical, VRTX. This is not Valiant, this is Vertex. It's done fantastically. Boston Property is another great real estate company. What we're looking at here, Eversource Energy, he changed its name. It's ES now, Eversource, looking really good. what was it before? Well, whatever it was, changed its name. And Skybook Solutions, Waters Corporation, Hologic, Akamai, Iron Mountain. I mean, it just goes on. Fantastic companies, Teradyne, TripAdvisor. It's even got Staples, which used to be a fantastic company. Now it's struggling just to stay alive. All right, so let's go through this. As far as I'm concerned, the Dow has got a schematic that says lower lows and lower highs. It made a Chapman Wave peak G at 21,169 on the 1st of March, speech day, speech night, next morning gapped up, and that was it. It was a Chapman Wave 5 in the daily. We've got a Chapman Wave 5 in the weekly, but I haven't really officially got a sell mode. I got a sell signal. I would like to think it's a sell mode, but the long-legged doji candle of last week says that this week it has to happen within 1 week. This week needs to see a close below the low of 20,517. If it does that, then we've got a sell mode in place. Everything looks, the MACD stochastic, everything looks like it should be a sell mode. We've already taken 1, 2, 3, 4, 5. This is the 6th week since the high was made on March the 1st. Everything about it says that it should be pulling back. Just quickly, let me go to the 120-minute chart because I wanted to show you. We've just gone to a leg D. Remember, what did we look for? We look for Ds, and that's where other things can happen. We've got a leg D right here in the 120-minute chart of the E-mini. Why is it taking so long to get there? All right, doesn't matter. Let's go to the parameters. Now I'm going to go through parameters. INDU. So the Dow parameters are real simple. A close below 20,620 to 20,580 support, that key support cushion says we're going to be going down. I'm not sure why that's taking so much time. Okay, I just kicked it into gear. Let's hope that works. There we go. And what I'm really looking at is, and this is what I showed my subscribers over the weekend to my opening call. Oh, don't forget, we've got a fantastic thing going on right now. 50% you can make on your money. If you are already a subscriber, you know exactly what we're talking about. But if you're not, subscriber to one of the programs that TFNN sponsors, whether it's my opening call or it doesn't matter what it is. This is a perfect time to get a 50% right here. Let me show you what it is. Go to the front page of TFN. You've got until what happened? What happened? Right there. You've got a bonus Spring Tiger dollar sale up to 50% bonus. Get up to $750 Tiger dollar bonus. Sale ends on April the 16th. There are 2 packages. Fabulous opportunity in which to take advantage. And if you're not, I mean, this is a good time to. It's a good way to experiment. Get yourself some kind of one of the. Let me just. Sorry, I'm trying to get this here. Close. That should work. I don't know why it's taking so long. I don't usually have this kind of trouble. Left side here is my daily chart, and we're missing it. We've got the weekly right here. We've got the 120-minute, which I can now take away right there. Running out of time. All right, I'll get to all those things. By the time we get back, my chart should be just fine. I don't know why it's taking so long. Format. I'll be back. Basil Chapman, Dow's up 73, S&P's up 70. Back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Let me do this. I've got everything back. Here we go. I got a lot of emails. So they started off over the weekend. Let me just do that because I'm liable to run out. Chris asked me, what did she ask me? She said, right there. Okay, what about CX? CX is CMAX, so CX right here is trading at $9.29. We do have a small position in this. This is the cement company, Mexican cement company, because I'm expecting a leg D. It's made a left side, right side price time match to the breakout right there, using the Chapman Wave methodology of the cup formation, looking for the fulcrum right there. And what does it do? It goes right to a leg C. I could call that an E, but everything about it suggests that the MACD is just strong enough, stochastic's not so great, that there should be an attempt to get to a higher high above the $9.62 that was made in the 5th. We're giving it a chance. And then I think we start to pull back because of the pattern that's just formed. But what's really important is that if it does that, if it does it this week, it extends leg C in the weekly chart. And the weekly chart is what we call a Chapman wave overlapping wave to leg D, and then it slides. So I wrote this in earlier on when we were underneath that high of 951. I said there's a Chapman wave. We had a leg C right there. There's a technique that in my CD introducing the Chapman wave methodology where I go through the patterns, and one of the patterns in the Chapman wave is that if underneath the previous high, in this case it was a G/B, I'm thinking it's more like a B at 951 in the weekly chart because the MACD and stochastic were holding quite well. If there is underneath it a gray A and a B, when it powers, if it powers through that left side 951 level, that immediately picks up the old B, reactivates it so that it isn't a B minus, it's now a B. Together with the B that was made down here, they're great. You've all of a sudden started a really strong leg C, and that should go to at least a D, and then there's quite a sharp pullback. That's the methodology involved in the Chapman wave, overlapping wave. It's usually from a C. When it happens to in a B, you usually go to a C and then a D. Okay. And that says that the target of 974, the 200-period exponential moving average in CMAX, trading at $9.30, down 4 cents, it says that should become a magnet in the monthly chart. And that's really what I'm looking at. Completely wrong. We've tightened up the stop today. We'll see what happens. All right. So Chris, I'm thinking that yes, there will be there was a peak F in the 120-minute chart. That's why we bought it on the dip. And now we're waiting for a brand new buy mode to trigger in the 120. We'll see if it can happen. All right. So that's that. Now the next thing, so that's CX. Next question I had was, Sandy wanted to know about Orex, O-R-E-X, and had been asking me about this for a number of weeks. And I said, about a week or so, I said, don't buy, don't buy, don't buy. On Saturday or Sunday, I emailed him back to say, you know what, O-R-E-X, this is Orexigen. This is the first time that the candle is starting to make some kind of a base. I would not be surprised if it has more to go. If you want to just nibble here, treat it only as a nibble because it's still kind of negative. It has to prove itself. I personally would have a little bit of patience. I'd wait a little bit longer. I think it's going to test the 250 to 230 area, 220 area. I'm not sure it's going to go down in this move, go all the way down to the left side low bar that I'm really targeting, which is 209. That's the low bar of the breakout on the 4th of January, where it went from 209, the low, to $3.55. So that candle, I'm thinking that that's my left side, right side price time action. You've got until tomorrow to see if it breaks down. If it doesn't, the MACD and stochastic could start to move higher. So there's a nibble is fine here, but don't get carried away. Treat it as an exploratory buy. But weekly chart, monthly chart, daily chart needs a lot to build some strength. Okay, so be careful. Just keep it on your watch list. And if you have patience, you know what? I'd even rather buy strength than weakness. So that's what I said here. Next one was, let's go to, so Roy gave, actually, hi Basil, this is Roy. No, not your grandson. That was a good one. I was wondering what your thoughts were on Bitcoin related items such as BITCF and GBTC. You know, I've been trying to find Bitcoin and then I completely forgot it as a stock, because I know it went public a while back. So we've got BITCF, and look at this chart. Even intraday, it's had a move that's gone from a high of 0.39. Remember, this is like a yellow pay, what is it, pink slip stock. So you got to be real careful. This really does have volume, 1.1 million already, not even 2 hours into the morning. So it goes 0.39 high, 0.285 low. That is a big percentage move up and down. It's up 3% today. I've got this as leg E/C in the daily, G/C in the weekly, and my eye tends to think of it as more likely a G that's going to have a pretty serious pullback by Thursday. If it makes the D to the top side, I think it could start to pull back. But this is a rocket ship. It's gone in 2 months. It's gone from a low of 0.042 to a high today of 0.39. I mean, that is a whopper of a move. First Bitcoin cap corporation, trading at 0.375, up 0.011. That's 3.02%. That's a big percentage. Earlier on, when I looked at it, it was near the highs. Then I looked at it again, it was near the lows. I thought, uh-oh. Now it's near the highs. And look at the MACD, look at the stochastic. I think it's getting a little overbought, but yeah. So I'm not going to give too much of a comment on it, other than to say maybe a peak E in the weekly. Interesting. DE, it would be an F, because that was slightly higher. Look, 0.059, and then it goes to 0.06. So that is a peak right there. So I've called it A with a potential instant restart, but everything about it says more likely we've gone D to E to F to G/C. So I don't know if you're trading it. If you're trading it, all I can say is good luck. I'm going to try to follow this intraday for myself because I love moves like this. But I would have to test to see how quickly you can get out, whether you can get your price, all sorts of things like that. The 120-minute chart, I didn't finish, but just to do it real quickly, what we've got is a brand new A, B, C, D. Yeah, brand new D in the 120-minute chart. So I'd be a little careful now. I'm getting signs that it's just shorter term. It's a little overbought. And the way it moves, it could easily go back to 0.238, one of the moving averages, from 0.37. So just be real. The same way, it could also go to 0.50. I mean, this is the way you think. It's a rocket ship. So let's just stay with that one. I won't go to the other one. And do you recall the Economist magazine cover from January 1988 with the New World Order currency, the Phoenix, coming by 2018? Now, I just remember talk about it. I don't remember it. I remember the talk about it. But yeah, I'm going to try to check it out. So thank you for that. And believe me, this is an era where new things are leapfrogging old things. So I'll check that one out. Now, perhaps you may change the handle to Peak C, Peak D. Which one? Oh, the SMHs? Oh, okay, let's go do that. So the SMHs, well, what was I'm not sure if there was a question yet. Yeah, I've got a Peak G. A Peak G at 80.05. March the 30th. It's in a sell mode. We actually short this, very different instrument, and I think that's a Peak E in the weekend. There's another reason why I am negative. We are mostly on the short side indexes. We have some stocks on the long side. I'll be back. We'll talk more about these questions that I've had. Be right back. Basil Chapman does at 69. See this right here.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I had a question about SYT, Syngenta AG, ADS, Syngenta AG. I don't know where it trades. It's overseas somewhere. I've got it as a peak D right now. And it really looks like a stock that trades very lightly, and it trades overseas. Yeah, very light volume, and it's really, each candle actually looks like a doji. I mean, there's not much going on. All I can say is that it's made a peak D. It's at 89.65 SYT trading at 89.65, up 5 cents. If you're long, I say, you know what? Stay long, but you got one of two things that I would do. I would actually take a little money off because this leg D in the weekly is still very strong, but it looks like it wants to pull back from 89.65. If it takes out 87.50 support, it's going to go down a little bit more, and it's leg. Say it's D in the daily, D in the weekly, D in the leg, D in the daily. Sorry, peak D in the daily, leg D in the weekly, leg D in the monthly, and below the previous major high of peak C minus. It was an IPO back in 2014. 98.15 was the high. Most recent low was at 61 back in September 2015. So it's had a really nice move. I would just, it's been taken out. Oh, all right, done. So there's nothing, it will not exist. Nothing to see here, folks. It's being taken over. That was, didn't see that. Okay. Next question is, going in order, we've got so Roy, yeah, fantastic moves in that Bitcoin. I just wondered if you don't mind. I think that we got you a break when I was just about to show you the charts, because that was a peak D with a down arrow. Remember, I already put that in a little while ago in the E-mini 10-minute chart. I showed you the the 2-minute chart. Made a peak F with a Chapman wave 5. Now it's in leg C to the downside, testing the 200-period exponential moving average right there. This is a very important moment, because my contention has been that bear phases see selling intraday at the opening. Whatever happens in the opening, the intraday, you're liable to see a rally and then lower highs and lower lows, and you should close towards the low of the day. But real bear markets have 15.12, S&P future opening, and then there's a rally attempt, and then boom, by the end of the day, every buying opportunity just gets hit as a selling opportunity, and you close down at the lows of the day, and then the futures open again down about 15 points and repeats this process over and over. I think we're in that phase right now. That we're going to get there, and the volatility index for the first time is really going to start to elevate. Okay, so that's that. Oh, GBTC. All right, GBTC. I wasn't going to do that today. I was going to do it tomorrow. We'll do it now. GBTC. This is A, B, C. So this is at 126. This is Bitcoin inverted trust, something trust, INVT. Sneeze day today is very interesting. GBTC trading at 126 round number 0000. So this is like a pink slip one as well. This is a much better chart than some of the others that we've been looking at, because it's the MACD is rallying, the stochastic's rallying, but you've got to put it together with the BITCF, I believe it was. Yeah, and that's spectacular. So I'm not sure what the difference is here, but I'll get to it again. Bless you. Thank you, Dan. Everybody's giving me a blessing. I do need blessing. And Happy New Year to you. Happy Passover to all of you who are celebrating the Passover. This is the season of spring, where festivals. Remember, all of these holidays that we have now were basically festivals of spring and other things, and then they became amalgamated to become spiritual. So there you are. We're talking about bless yous. We're going to go to, all right, so that's enough with that. All I can say is that I have no idea how you're going to trade stuff like BT, where did it, GBTC? I think that was it, GBTC? GB, yeah. So I haven't finished the notation on this. I want you to do the Bitcoin one, and this is Bitcoin. I don't know what the INVT stands for, but it is a trust. So it obviously trades very much like that. Now, this is what I wanted to do. Just technical analysis says that I'm going to join these peaks right here, and I'm going to be unconservative. Usually I go to the body, but in this case, we've already spiked above it. So there's a falling axe formation, and that says, hey, this is good action, and that there should be a D if the technicals are still improving as they are. The week A, B, C, D. The weekly has gone to a D, so this is a consolidation. I'm going to make it into a rectangle formation right here. It's the first thing I do. I look at the rectangle, say within this you can go chop, chop, chop. 140 is probably resistance. 138 to 141 is resistance. I'm not sure this move's going to take it to the high of 152 round number on the 6th of January. and a week of the 6th of January, and the bottom is 118 will be support to 108. So just keep that in mind. All right, let's move on. Next question I had was, GT wants to know about IWM. Well, this is the one that I've been following very closely. It just cannot hold rallies. The Russell 2000 is just, it's had a tough time. My contention is it's going sideways, and that probably it won't be as bad in a chart formation if it can hold this low right here over this coming week. If it doesn't break 132.40, if it does that, yes, there's a peak C. I think that eventually it's going to come back and go to a D, but that'll give it much more firing power to go to E and an F, or even recycle. So treating it right now, monthly charts are all positive. My biggest concern was with the Dow, that it had made a peak D. Remember, we always get Ds, so what you got to be careful at. With last month's high, and that if we don't make a new high this month, we can be looking at some kind of a pullback that could start to accelerate very soon if the NASDAQ, and I remember we're looking at the QQQ series at 132.06. It just doesn't have any strength anymore. And I did say that I would go through a few of these right now. So Amazon made a peak D. I don't think it's going to make a leg E to the upside at over 923.72. I think based on the technicals, there's a little bit more room, but I'm going to draw the rectangle and then I'm going to draw the arch, and that's really the pattern that we'll follow. This is the schematic that I'd be looking at over the coming week and a half. I think it's going to try to rally a little bit more, and then it's going to break. And the moment Amazon trading at 905.94, up 11, up 1.24, the moment it closes under 889, the low that was made on the 7th of April, closes under it, we started to make lower lows and lower highs. Just keep that's what I'm looking at. I'm completely wrong. If Amazon this week takes that 923.72 to start leg E to the upside in the daily. I've also got a Chapman wave 5, but that 5 says you can still accelerate a little bit more. But my thinking is that if it fails from here, that's going to be a really good sign. But the weekly technicals are still pretty darn good. That's why I'm not thinking of Amazon as a short. I'm just saying I think it's going to take a little time to digest these gains. I was asked the other day about Sharp. I can't even remember if I did it. I know I did all the work on it. Sharp had made a peak. Gee, I remember that. I said, this is the same pattern we've seen. We just saw it in Amazon. We're seeing it everywhere. Spike to the upside, a kind of a flagpole to the downside, and then a flag attempt rally. So many of these, this is distribution that I'm looking at. Sharp, SHOP, Shopify, e-commerce store. I think it's going to have a problem at 69.04, up 33 cents. If it closes under the doji candle of 67.05 of the 31st of March, closes under it, I think it goes down and immediately tests the low of the 22nd at 64.75. Basil Chapman, Dow's up only 8. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Dow is down 6. S&P is now finally down 1. And the E-mini is down 1. Look at that 10-minute chart, peak D. Remember, what's the objective? Look at those Ds. D over there, 2360.75. Back at the 1340. So that's, I always forget. 140 on the 7th. Makes a peak D again at 910 on the 9th. That must have been last night. Yeah, it was. And then what we do is we come back down and make a D right here at 10:40 this morning Eastern Time on the 10th. And now we're pulling back. Interesting. So the tide has changed. This is what I've been talking about for about a month now. I've been saying I think that the tide has changed. We're only waiting for the QQQ series to catch up. And look at this: 1, 2, 3. 1, 2, 3. Hit the right chart right there. So QQQ 1, 2, 3. Yeah, down 5 cents at 131.92. It's that same pattern we've just been seeing. I think that's going to be a peak F at 133.48 on the 5th of April. So now let's go to next question was. So GT asked about that. The wave count. So this is just one more time. IWM. There's that falling axe resistance. It just keeps pounding away. Every time it gets close, boom, it gets knocked down. All I can say is at 135.49, down 4 cents right now. The IWM technicals should have been able to hold it above that trend line on last week when there was the opportunity. Couldn't do it, and now they're failing. So this is not a good sign. And finally, the MACD and stochastic and the weekly charts are very, very poor. Monthly still is very good, as it is in most of the indices. All right, let's go on. Bob wants to know, Swift. I think it was Julie had mentioned last week something about Swift. Is it a buy? And I looked at it and I said, these H patterns tend to want to retest. It did hit the 200-period moving average. And I just gave it a miss. What a big mistake. It's at 24.70 right now, 468. Take over. I can't remember who's taking it over. One or the other. Is it CSX? Who's taking it over? Oh, no, Swift is the trucking company. Anyway, someone's taking it over. CSX is holding quite nicely. So the only thing I forgot to do was CL, and I'll do that now because there's a question about it. CL acting very well. That's crude oil, not Colgate. This is crude oil up 67 cents at 52.90. Remember, I said I like this. I didn't like it before. I just thought it was in a trading band. But a few days ago, I said, hey, this is really good action. It's getting closer to the 200-period moving average in the daily. And then I said, no, this is the stochastics at 90% or 89 at the time. MACD is good. So this is it. And we actually are long one of the integrated oils. I don't even remember when I was last long on integrated oil. So this says it could be a decent bounce. The H pattern in there, I spoke about it, took a long time about the crude oil chart, saying it's rising lows and slightly rising highs. That says maybe it could go a little higher. So I'm really looking at it and saying that crude oil maybe this time does go to the 54s. We're going to watch it real closely because the stochastic suggests that there should be further upside. The weekly chart says, I'm trying my best to rally. Technicals are not helping me. It's the daily that's giving me the push in the weekly, and that's all I can say. The support at 51 is going to be absolutely imperative. If it closes under that, the rally could be over. Meantime, back at the ranch, it's actually looking very good. So that's that. Next question I had was JP Morgan right here. JP Morgan, Goldman Sachs, Bank of America, gaga. No, very ugly. I don't like them at all. XLF, I looked at this over the weekend and I said to myself, I think that there has to be some testing further. And if you look at the TLT, I never did that. The TLT making a leg D, possibly a peak D. There's the schematic that I've got in the weekly chart. Lowercase h goes to a lowercase m. And all I can say is that as far as I'm concerned, the rates, I can't do it right this moment. I'll do it this way. Let's go to the TNX. TNX, that's the 10-year. In fact, that's probably the most important of all of them, the 10-year. That's where the rates are already based on the 10-year. I think that as far as trading is concerned, I might be mistaken, but I believe most of the trading is on the 10-year. Look, it's gone to a trough, A, B, C, D. On the way up, we've got a peak D. On the way down, we've got a trough E. It's attempting to rally. See the way the MACD is trying to turn up. See the way the histogram, the little vertical 0% line bars are trying to cross positive. It's at minus 0.06 right now. See the way stochastic's making higher lows in the W formation. This is attempting to rally, but I did a lot of work. I didn't show it this weekend because I'd shown it last week. I wonder if I can do that now. All right, let me just do this. I'm getting out of that chart, and I'm going to go to the my long-term chart to show you something really fascinating, and that is, I discussed it on Friday. I remember that. I just sent so many charts out, very long-term charts out to my subscribers over the weekend that I kind of skipped over my triple yield chart. Look, the triple yield chart is making the H to an M. The 10-year, that's the 30-year, hasn't broken the low of the left side, but the 10-year has and the 5-year has. And that event, this is my rule of thumb in the Chapman wave drop bucket formation. That's the double top U-shaped formation. If there is a pullback of 30 to 50%, expect that you're going to test the bottom of the cup. If the cup gets taken out, watch out, because if there isn't a bounce right back in, and it has to be almost within 1 or 2 bars, you can make a 1-to-1 to the downside. So I'm not expecting that right now because we've gone back into the cup formation. I'm going to be watching this real closely. My contention has been that the triple yields, the 30-year T-bond yield, the 10-year T-note yield, and the 5-year T-note yield are stuck in a range with the Fed implying that they want to increase the rate, but the market's saying, you know what, you might want to do that. I'm not going to let you do it right now. There's so much uncertainty. That's really what I'm thinking about. That's why I don't think rates are going to skyrocket right now. If you're looking at this, you've got a new leg E to the upside, and that's very positive for wood. Let me just double check. I didn't speak out of turn. 58.33. We've gone to 58.34. We've started leg E. I discussed this the other day. I said this looks good, but I don't think that the HGX, which is the Philadelphia Housing Sector Index, is looking, weekly chart is looking that good. So this is, I should actually make that red. I've got a code that we always go by for all my charts so people can just take one glance and know exactly where we are. So this is a peak F/C right now. The week's young, so I don't want to extrapolate from this. Just to say that the HGX, the Philadelphia Housing Sector Index at 266.86, up 61 cents, needs to push, doesn't have to break, doesn't have to close, just has to break to 27000, 2699 to 269.99 was the previous high. It just has to go 1 penny above it and it starts a D. All right. So I want you to get those out the way. Now one question I think I forgot to ask. Tim wants an RDSB. RDS, is that Royal Dutch RDS.B? Let me see. Yes, very good. Okay, we'll look at that because that goes into the integrated oils. Same kind of pattern I'm seeing all over the show. I will do it for you, Tim, as soon as we get back. Basil Chapman, Target Ignitions Hour. Dows up 13, S&Ps up 1. We'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back and we're looking at A, B, C, D. This is an E, but there's a real good chance that it could become, treated as an E for now. So we're looking at RDS.B, Royal Dutch Shell, PLC. I forgot Dutch and Shell had amalgamated. Okay, Royal Dutch Shell, trading at 56.50, up 7 cents. Now, I need to look at this based on the weekly chart, and that weekly chart suggests to me that if I can just get this organized right there. Yeah, you always have to go back, identify the lowest, most obvious low bar. In this case, it's the low from 2016, January of 2016. You go peak A, peak B, peak C, peak D, peak E, peak F, new one, A, B. I'm going to call that B/G/B. Here's the reason why. You see the way the stochastic has been fading? You see the way the MACD has been pulling back? and you see the sharpness of this pullback. If it's a B, it has a lot of work to do before the shell, Royal Dutch shell can break above 59.56. That's 3 points, just over 3 points from here. So I'm going to be very conservative. Now, what I could have done is gone gray A right there on the week of the 10th of June, and then gone E/B, F/C, and this could have been a D, and wrapped it up. In fact, that's probably the best way to do it right now. But look, the MACD still kept going up, so I really can't do that, even though this pullback didn't take out that left side low of the week of the 3rd of June. All right, so I'm going to make it real clear that Royal Dutch is acting very well right now, but it failed to break, and this is really important for me, and I'm seeing it in ExxonMobil. Look, ExxonMobil right now, nice action, but it just hasn't been able to follow through to the upside. So I'm saying that crude oil holds the key right now, and crude oil in leg D today, if it cannot get and close above 54.29, it could certainly get there, but it has to close above 54.29. It kind of pop up and then reverse down. That will be very negative. So I'm watching this real closely. The technical say it should go higher. So I'm just going to say, all right, let's go back, Royal Dutch, if I've got it right, B. Yes. Now, all I'm going to say to you is if you are long, Tim, what was the question? I'm looking for an entry point. Oh, what do you see? Oh, that's tough. If you had said you were already long, I'd say great, because now you can handle the stop. At this particular point, I'd have a tough time saying to you, do anything other than start a small position. And the reason being that weekly chart, although the candles are very nice, it's made a time's are running out. You know what? I'm going to say to you, Tim, let me do some work over it. I'll answer your email. I'm just going to say that if it pulls back from here, it has to hold 56 to 55.50. That's key support. If it breaks out, it really must do it by tomorrow and just spiral higher. So, sorry, that's all I'm going to be able to say right now. I prefer the one that we've got at this particular point for my subscribers. Now, I looked at one the other day, Friday, which I hadn't looked at for ages. I forgot to write it down, which was looking even better. I'll have to think about that. So in the meantime, it's not one of the better ones, but it's acting quite well. So let's do this VIX index, VIX.X. The VIX index is up at 13.72. This is Monday. By Friday, it could be down at 11.50. I don't think so. I think this is the week that it starts to kick in. I would not be surprised if this week it actually starts to tries to make a leg D above 15.11. That was 2 weeks ago, the high. Make it simple. The VIX is at 1373. If it closes above 13.50 and the market starts to pull back, Dow's down 40, S&P's down 5, the signs are that we're probably correct in suggesting that there's a rotation going on. There are some Dow stocks that are kind of holding well, but the NASDAQ stocks have become extremely vulnerable. That's the point I want you to get across. Check out my opening call. Check out the fabulous Tiger sale that's going on. And check out all the different subscriptions that you can get for a discount. I'll be right back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,